We're going to have to take a look at Rio. It has maintained its guidance in the Pilbara despite reporting an 8% drop in iron ore shipments in the first quarter. Labour shortages, supply chain snags, they're curtailing the miners' efforts to ramp up operations, shipping 71.5 million tonnes of iron ore compared with 78 a year ago. Production for the quarter, it's down 6%. CapEx guidance reaffirmed, expected at about $8 billion for this financial year, saying it is anticipated a challenging first quarter with production expected to lift in the second half. This as it warns of downside risk to the market expectations due to geopolitical tensions and those COVID lockdowns in China. However, it's expecting commodity demand to continue, underpinned by the global energy transition. Shares have slipped this morning off 1.7. Adam, where does Rio sit in your portfolio?
Well, look, Rio is definitely the number 2 player in the space. So BHP would be sort of number 1, Rio number 2, and then Fortescue number 3 for that iron ore production. Rio certainly looks like a very good diversified miner. So obviously Fortescue has basically got one product, one customer, iron ore and China, whereas Rio has that diversification, aluminium, copper, diamonds, iron ore, those kinds of things. But the use of the term challenging, I think, is what we need to really focus on, and they also need to lift their operational performance, and I think that is a key thing going forward because it says it all. Rio's got a long way to go to regain its mantle as one of the biggest global miners, operators in the industry. But the problem is that if the commodity prices weren't where they are today, this would be a very, very different story. And so it is really being held up by the inflated commodity prices. And yes, they talk about China, they talk about COVID, they talk about the tailwinds that are happening there, but the headwinds that are happening there. But if we didn't have the tailwinds of those commodity prices, I think it would be a very different story. So I'd be cautious. We're neutral on Rio, prefer BHP at the moment, and certainly Fortescue is looking a little bit more attractive on that sort of value metric. But Rio is a neutral from us, so I'll say hold.
A hold, okay. Andrew, your thoughts?
Well, of course, I'm struggling here because it's not an ETF. Only joking. 20 years of being a used share salesman, I've still got it when it comes to direct equities. Look, with Rio, everything that Adam said, it is a somewhat one-trick pony when it comes to iron ore, and then of course you throw a little bit of copper and aluminium in there as well. The other thing that Adam kindly was avoiding, but I'll say it, is the ESG component relating to Rio. So of course there was concern, and rightly so, with the destruction of those Aboriginal caves. And there are a number of investors, I certainly know my clients, and more broadly in that sort of ethical social governance space, who've actually avoided Rio for that. Now, you know, they're obviously contrite and redemption and all that sort of stuff, but that might be sort of weighing on ESG funds and their ability to invest, remembering that for every $2 invested into ETFs in Australia, $1 is looking for a place with an ESG focus or ESG home. So that would be the other reason I'd be probably a little bit cautious. So similarly to my learned friend Adam, I too would be a hold.